welcome back to another episode of the Finance Bible podcast. Zeke here.
And your co-host, Oscar. But before we get into it, please note that nothing in this podcast should ever be considered as personal financial advice.
Of course, if that is what you are seeking, reach out, we'll get you in touch with the correct professionals, get the job done properly.
Sit back, relax, and enjoy the show.
Let's get into it. Another one not meeting the definition of unemployment based on the international guidelines. If you're volunteering, you're doing a little bit of unpaid family work or anything like that, you're also not unemployed. So I can go and volunteer and do something, not get paid, but guess what? I'm employed. And the final one, which we've already discussed, is underemployed. So people who are employed, but they work very few hours, less than what they actually desire. You're not counted as unemployed. So you might be someone who is 20 years old, you're trying to get a job, but you can only get 3 hours a week. And you just take it because you have to. Like, what else are you going to do? If you need the money, you're not unemployed or underemployed.
Yeah.
You're an employee.
The one that's got me is from the ABS. They've shown the amount of people who are working fewer hours last month due to illness, sick leave, or injury, and the amount was 546,400.
Mm-hmm.
That number is 162,000 people higher than the pre-pandemic average during the 5 years.
Fair enough.
To 2019.
Well,
that doesn't raise alarm bells.
There's a few loopholes. I'll leave it at that.
It's just lost for words.
And that's something really important. As a man that...
I just feel like people just... I just want people just to have a bit of drive.
Gee.
There's always a way.
It's getting angry.
There's literally always a way. There's a lot of things in life. You get pushed down. It's like when you're a baby. When you're trying to crawl, you fall over, 50 times? And what do? You get straight back up and try and crawl again. And then all of a sudden you're walking in however months, I don't know the timeline of baby development. But
I reckon I would have been walking.
You get up
straight away.
But I think you've just got to have a crack.
Yep, have a crack, fair enough.
And it's just when people just take the piss of taxpayers' money. The job seeker, the people
Yeah, I saw your face when I said that, and I was like, all right, we've got a rant coming up.
I just get very triggered with that.
And mate, tell us how you feel. The mic's yours. I'm going to move away.
Well, it's just, there's no excuse. Yes, like I said, there might be some past things which happened, but just get out, get a job. It's not hard to get a job and start somewhere. You start a job, you meet someone, and then all of a sudden you set yourself up and it just snowballs. But the first place to start is actually doing it. So if you're really in the slumps and you really think there's nothing to do, there always is. You can get a junior job, a beginner role, a graduate role, wherever it may be, and work your way up. There's just no need to stay at home and do nothing.
Well, there we have it. Our first in 3 years. Our first angry rant.
Oh, here we go.
From Mr. Don.
I wouldn't call it angry. I'd just call it a disappointed rant.
Angry enough? I don't think so. Next time I'm going to really drive it in. Your money, Oscar. The tax that you pay.
I'm going to break the window.
It's got other people sitting at home applying for CEO positions.
Well, I hope they buy good games with it.
Yep, well...
Hopefully the new COD. That's all I can say.
The new COD, he loves it.
That's all I can say.
Moving on. The new home loan rates to predict, let's just say very late 2025, early 2026, you'd have to be calling homes, and it's going to vary pending LVR and all of that kind of stuff, but you'd probably go between 5.25% and maybe 6.5%, in my opinion. I know a lot of professionals out there are saying 5% to 6.23%, but I don't know. I just feel like that little bit lower is relying on us to make really good decisions. And we all know what happens. And Sometimes you just don't make the best decision.
Have you had experience not making the best decisions, mate?
I've never gone back on a decision. I can confirm everything
You
I've ever
own every
done.
decision.
I do. Everything I've ever done, perfect. It might not have been perfect, but
Yeah, I was
it's
going to
got
say,
me where I am, and
sitting next to me.
I'm quite satisfied.
Yeah, no,
I'll
that's
go
good.
there. And then your investment loans are obviously slightly higher than that. Probably between point 0.3 and point 0.5 higher. So I'd probably say they'd float around 5.8 to 6.9, give or take, by the end of 2025, early 2026. But again, professionals are expecting it to go maybe a quarter of a percent lower than that.
Hmm.
What do you reckon?
Yeah, mate, I think you're pretty spot on. I reckon it'll go around 5.2 to around even like 6.3, 6.2. Like, I don't think it'll, especially with everything that's going on, as you can see what we spoke about before with the insurance and even the spending on the retail side of things. I think, well, I hope the government, starts to figure these things out and actually realize that people are struggling out there. You really need to lower these things.
I think I also worded that poorly looking back
No, I think you're
because
fine.
uh, I think that I might have. I think some people out there might interpret it as me thinking the rates at that point in time will range between 6.9 for investment and 5.8 for investment. I
Mm.
mean, they'll go from roughly, 6.9, as in currently, some people are on that. Some people are on 6.6, some people are on 6.5, down to about 5.8, give or take. And then for personal, like not investments, homes,
Just lower
I
than
think
that.
it'll go from about well, between 6.2 and 6.5
So in
down
the
to
fives.
about the 5.2,
Mm.
5.25 mark. Um, Another fun one to talk about. It's an interesting one, and we'll have to keep some sensitivity around this topic. Economic risks and uncertainties. So all of that we've said now currently is based on the statistics we've talked about, our opinion on things, and what kind of things we can project to change. However, there's many things that can completely derail what we've just said. One of which could be geopolitical. So,
Yeah, that's at the
we're
moment as well. That's a big thing which could happen.
yeah,
Big possibility.
over the next 12 months, a huge thing. Like you've got the Middle East,
Yeah, even
which
Europe.
is running amok. Yep, Europe, there's problems over there.
Tensions in
But you've got Russia,
Taiwan,
you've got
China.
yep, Taiwan, China, both running amok again. Ukraine,
There's a lot happening.
and on top of all of that, you've got the election.
Yeah.
You've got the golf magician, the Trumpinator, and you've got Biden. So, I mean, what's going to happen there? I'm not. This is
Who
not a
knows?
political podcast, so we won't.
And another factor is like we spoke about earlier, the refinancing of all the COVID loans.
Yeah, because that'll have to happen at higher
That's
rates.
yeah, that's going to be have a big impact on everything.
Yeah,
So people will be, as mentioned earlier, coming off those low rates to the higher rates, coming off the fixed to perhaps variable or another fixed, whatever it is. Speak to your broker, but that's going to have an impact on individuals' cash flow, the whole economy, etc.
yeah. There's a lot of high level loans as well in that statistic.
Mm.
So people with loans of like 1.3 million. So they're going from 2% to say 5.5%, and it's going to be absolutely like it's a
That is
drastic change.
insane.
It's hundreds and hundreds of dollars per
They'd be
week.
sweating right now,
Yeah,
knowing it's about to come.
but yeah. So the geopolitical ones, like if there's war, if there's civil war, um,
Speaking of Civil War, great movie.
can confirm there's different policies that could get in place and all these different things with the election. So it'll be interesting. And then you've also got wage growth as well. Like, people are out here facing inflation of, say, 7% recently, and they might not have had any wage growth. Some have had 1%, 2%, 3%. Some have got an extra $10 a week. Oh, we.
Mate, back in our day, well, 2 years ago, a year ago, we got no wage growth.
Back in my day, oh, favorite saying.
Our workplace,
Well, it's a topic for another time. We won't go.
we can't go down there.
No, we
But yes,
cannot.
wage growth, they got a target of around 3% annually.
Add on to the pain of like geopolitical issues. There's a whole different range of things that they can affect, and you know, derail what we've just said as previously mentioned. So commodity prices can absolutely fly away. So conflicts and wars can disrupt commodities, oil, gas, metals, agricultural products.
The surge in the
And
price.
yeah, so
That's literally what
we've
happens.
already seen a bit of it with the fuel or the petrol, but that that's very likely, in the event that there is any hardcore conflicts, that's going to be a huge
Yeah.
issue. And I mean, you've seen all over the news lately as well. Actually, I don't think they've put it on our news, to be honest. I haven't seen it on ours. It's been like everywhere else online.
Hmm.
Like us sending, or a lot of countries sending tanks over to say like Russia and that to help with all the conflicts and everything and prevent invasions and that. And then we just see them being taken and put on the news and like lit on fire and blown up and stuff. So the money that's going into defensing and stuff is going to contribute massively as well.
Probably as well the whole supply chain. So, like for example, China, because they're in current lockdowns recently, from I believe. So they, because of that, that can lead to like shortages of goods coming to Australia, for example. So that is a big factor of what can happen. And then companies who may need the goods here, well, all of a sudden they're screwed and the whole cycle's screwed.
But you've also got like economic growth as well. So common sense issues deter investment. And if you deter investment, then it causes issues in supply capacity, you get inflationary pressures and so on. But if you've got all these problems going on where China's being affected and Taiwan's being affected and all of the emerging countries are being affected, then a lot of the stocks in Australia on the ASX that invest, like I'm talking ETFs, that invest in those emerging communities are going to take a pitfall. And that's going to have an impact on our economy directly because of the ASX, and so on and so
Yeah,
on
we're
and so
always
on.
like second or third best.
Yeah,
And that also comes with the fluctuations of the currency. So these events, which can happen, can lead to a currency depreciation. So that what that means is that increases the costs of all imports.
which
So
is
that
a huge problem
yeah,
for us at the moment.
yes, it is. So I had a bit of a stutter there when I said imports.
No, you don't worry about that.
No, don't worry about that. But yeah, that increases the cost of the imports, and also contributes to inflation. So, and as we know, inflation here is a bit cooked anyway.
Energy. So, I mean, when I say energy, everyone's probably thinking like solar and renewable energy and that kind of thing. But Ukraine has a huge impact on gas, like petrol fuel, gas, that kind of thing. And they massively have inflated globally, as we've all seen. But then you've also got central bank policies. So when you've got banks tightening their monetary policy very aggressively, for example, we did a little bit with the RBA. I wouldn't say it was very aggressive, but it was definitely aggressive. If you've got countries doing that all over the world, like not just us, if you have America doing it or China with their lockdowns on certain expenditure, then the economy as a whole worldwide, 305, is definitely going to be affected by that.
And what else is going to be affected is consumer confidence. We already saw it earlier, probably the fourth point in the podcast, but because of all the uncertainty, this can 100% knock all the confidence from buyers who like going shopping, etc. Just because they're nervous, what's going to happen. So this will reduce all this spending, and also the economic growth for the country, which is not a very good thing, especially for retail shops out there, because they live off people walking by online shopping. But if this is happening, if the insurance premium is going up, if you're coming off your fixed loan onto variable, there's a few other things which take priority.
Yeah, so you've got the overall global outlook there. A bit of everything. Like we've brushed through
I
a
don't think we've
few.
ever done an episode as broad as this.
Yeah, well, we've touched on a lot of different things that can impact it. We've definitely missed a few as well, but you don't worry about that.
No,
And
just Google it.
if the if the overall global outlook is negative, then I mean it goes into the consumer confidence, but it also then means that fiscal policy is going to change, monetary policy is going to change, and then we're going to be in a situation where people aren't spending money in certain ways. They're running out of money. Things are costing too much. And what does our government do when that happens? They dangle a little carrot and they go, "Oh, you can have $900 if you fit into this category, and
There we
you
go
can have
again.
$900 if you fit into that category." And they build it up and they give everyone in Australia that's over 18 and living in X uh, kind of situation, you can have $500. You just have to spend it on X, Y, Z or something. And then guess what? Inflation's up again. They hand
The
money out.
cycle starts.
It's a very, very vicious
Tough life.
cycle. And yeah,
That's
that's a
good.
fair wrap on it.
Good rap.
Anyone out there who has more to say, or there's things that we haven't really actually included, which I'm sure there is. Like we don't actually sit down and write out exactly what we want to say on the podcast because
Just comes to us.
we like to keep it conversational, and that way
Whatever
you
we
guys
think in
feel
the
like
moment.
you're
Yeah,
not sitting there reading a script.
if you want to jump up and say anything else and let us know if we missed anything, more than happy to take it on board and also even get you on the potty.
Yeah, flick it on through. We'll repeat it. We might even just do a brief touch up episode or something. We love a little touch up here and there, and yeah, we'll just keep everyone informed and happy as we do.
As we do. And look, as always, have a good night or day, morning,
Ciao, ciao.
whatever it may be.
Sayonara.
Ciao.
Goodbye. We hope you enjoyed the episode as always. You know exactly what to do.
Hit that follow button, subscribe, whatever platform you listen to this podcast on. Also share it to your friends, family, co-workers, whoever you think may benefit from it. But unfortunately, it's the end and we'll see you next week.